Check, please.
Hey, welcome back. In this video, we're going to talk about 3 more stocks that had a really bad year. This is Zoom, Snapchat, and ChargePoint. You might have seen a lot of videos on YouTube saying how great these were at their heights. And now that they have all fallen more than 50%, they might come into our sweet spot in terms of buying. We'll show you the financials using our software. We'll use our stock analyzer tool to show you what you should be paying for these 3 companies and just give you our thoughts on what used to be and may very well still be overpriced companies. I trust Paul and Mo. They manage a ton of money. They have multiple businesses, and they will give us some guidance going down this road. So, Paul, what do you think about these 3?
Okay, so what we're going to do here, guys, is first off, follow us on Instagram. Our new Everything Money Investing Instagram account.
Yes.
It is flossing. And then follow us 3 personally because we're having a little competition to see who can get the most subscribers. I'm just kidding. Just follow all 3 of us.
Of
Jesus
course.
Christ.
Go ahead.
So, guys, we're talking about Snapchat, Zoom, and ChargePoint. Now, anybody who's watched our show for quite a bit of time knows that we've gone through a few of these things over time. Now, look at Snapchat. By the way, who here has Snapchat?
I never got on the mode. You know.
I canceled my Snapchat. I just got back on it for one person and one person only.
Who?
Lisa.
Oh.
Because she likes to send pictures of the dogs and things like that. Literally any requests I get, I just decline immediately. Because I'm just like, this Snapchat is literally stupid.
It is stupid.
Zoom, ticker symbol ZM.
Well, are we doing Snapchat first?
Oh, shoot. Are we? Go ahead.
Snapface.
$83 a share, 52-week low, 35 where it's at right now.
Mm-hmm.
Let's see. The last 5 years. Yeah, look at that. Paul, it's not going to fall in half. You're stupid. Oh, really? It was September 24th. It was $83 a share.
That wasn't long ago.
No, it wasn't. Now it's 37. Okay. So let's go to the 8 pillars real quick. And we'll give you guys more information later on how you can get all this software and get all your 8 pillars done. So no income over the last 5 years, no cash flow over the last 5 years. And that, by the way, that's collectively over the last 5 years, not individual years. Shares outstanding up 37%. Well, you can't have debt. Yep, that's terrible. But revenue growth is up $3 billion. Net income growth is up 2.6. Cash flow is up $811 million. Okay. Now, guys, for those of you who are wondering what's going on here, every investment's the present value of all future cash flow. We don't know the future, so we have to make assumptions of the future. That's why our software is so useful. We created a stock analyzer tool. It allows us to take a company and say, okay, what's the future going to be? And let's put some assumptions in, and it'll tell us exactly what we need to pay for the company today based on those assumptions, right?
Yep.
Okay, so let's go to our stock analyzer tool for Snapchat.
This is going to be fun.
Oh, yeah, I'm sure it will be.
Paul, I'm almost in tears here because we did a video about Snapchat a few months ago.
Yeah.
And someone said, Grandpa Paul doing his research, quote, I don't know people who use Snapchat.
Isn't that funny? I'm on it now, Francesco. Francesco. Is it Sesco or Chesco?
Look who...
Who uses Snapchat anymore?
Yeah, keep going, Paul.
Xavier, do you? How old are you? 22?
Yeah.
22.
All right, keep going with this.
Okay, so revenue growth. Mo, give it to me.
Um,
You know, can I make a comment? Why are we even looking at Snapchat?
I don't know.
Because it's fallen. I mean, maybe
But Instagram, like I look at, let's even look
Listen,
at.
here's what happened with Snapchat. Snapchat came out with like, you poke on something and it shows you a story. Facebook did it. Instagram did it. YouTube did it. Everybody did it. So Snapchat doesn't have another direction to go.
Well, I mean, don't we see most of these social media platforms rotating in and out? I guess besides Facebook, haven't they all been subsequently replaced by the next?
According to this, they're still growing.
Yeah.
Really?
Really? Okay.
So maybe it's overseas.
They're still growing. I don't get it.
I love Snapchat because Bill Belichick called him Snapface. I love it.
So keep going, Paul.
All right, let's do revenue growth. I'm just going to take this one over. I'm going to do 15, 22.5, and 30% revenue growth. Profit margin. They don't even make money.
They don't make any money.
Oh, boy.
5, 10, and 15.
Sure.
Free cash flow, same thing. I don't even get how to do this. PE, 16, 18, 20, even though it doesn't make any sense.
This is literally throwing poop at a wall.
That's exactly what it is.
Well, so let's calm down here. For the viewers at home, when you say I can't even make sense of this, you're putting in numbers that simply don't even exist at the moment, right?
Yes, they don't even exist.
This is the definition of speculation. We're just putting in numbers that we say, okay, well, other tech companies do this,
and we have no reason to believe it will be any of these numbers.
There's no reason to believe that it could be a high of 30% or it couldn't be a high.
Guys, and by the way, here's the funny part. We hit the analyze button. It takes 30% revenue growth to even get to our high number. What did they do last year in revenue?
It's a 73%.
No, in terms of actual revenue.
3.7 billion.
Okay, so 30% growth for the next 10 years.
Oh boy.
It has to be $51 billion in revenue in 10 years.
Just to justify today's price.
Just to justify today's price.
So you could
to get a 12.5% return on your money.
Right.
Hey, can you shop on Snapchat?
I don't know.
You should bring that feature in.
So take home is just avoid.
Yes.
I mean, listen, maybe if you understand the social media world and you think Snapchat's going to, I mean, we just asked, I don't know. I'm
This one's got you dumbfounded.
I'm still dumbfounded they actually have user growth.
Yeah. I'm dumbfounded that you have one.
That's really the moral of the story, the take home. How about Zoom, Paul? Ticker symbol ZM. Let's get after it. This stock has, wow.
This is the most disruptive company.
Holy
ever.
cow. So we know this. This got really high and overpriced during COVID. Everyone did all their meetings on Zoom. The share price went all the way up to almost $570. And now $158.
Intraday high.
So Paul, maybe this goes back to your idea of like, tell them about your house. Just because your house, I like this analogy when you say, 2 million, 10 million, 5 million. Tell me about your Zoom.
First off, having to do a Zoom, guys, when we were going through COVID, I remember, and we have to look at our old videos. I remember thinking to myself, like, well, if you believe that we're permanently in this level, it was just exact example of hype. Oh, wow, Zoom is where everybody's going to meetings now. Let's just go bid up the price. So it kind of builds on itself. There's no fundamentals involved. Stock keeps going up. Damn, everybody's using more Zoom. Stock keeps going up. People keep buying it, and that's what happens. And eventually, what ends up happening is there's a come to Jesus moment where people go, wait, and look at this. 500 and what is this price? 560?
Yeah.
But the intraday high on that was 588.
588, and it's now 158. If I had told you in October of 2020, we were literally still in the pandemic. If I told you this stock is going to fall 60, 70%, you'd have been like, Paul, I'm sorry, but you were the dumbest human being alive. Look what happened.
People did say that.
Well, people still say it. My dad still says it.
Yeah, my dad still says
Sad.
What was that?
I was talking to Brielle about it last night. I'm like, my dad definitely thinks I'm an idiot.
Oh, yeah.
100%.
I think Kevin has an inkling to be a smart investor.
Yes, he does. But he's surrounded by them.
But he's surrounded by
No, Graham.
What was that?
You seen Graham?
No, Kevin.
Oh,
Our
yeah.
friend.
Graham. Where did Graham come from?
Sorry.
But he's surrounded by morons who, anyways.
Yeah.
So let's go look at Stock Analyzer for our good friend at Zoom. All right. 10-year analysis. Let's go. All right. Revenue growth. Let's go 12, 15, 18% for the next 10 years. Profit margin. I'm going to do 15, 20, and 25%. Free cash flow, I'm going to do the exact same thing. Because guys, remember, their revenue is going to start to dissipate as people go back into the offices more. Just remember that. The revenue growth will grow lower. 14, 16, 18, 14, 16, 18, and 12.5% all the way around for returns. Analyze. All right. It's going to fall in half again.
Oh, my.
Low side, 45. High side, 135. In the middle is 80. So basically, it's got to fall in half again. And these are based on these assumptions. If you want to go change those assumptions above, you say, Paul, you're being too conservative. What did they do in revenue last year? They did $3.9 billion. Yep. So in the middle range, that 15% revenue growth to the 10th times 3.9 takes them to $16 billion in revenue. Okay, that's not awful. No. Maybe it's reasonable. But at 8, you have to decide what you think a reasonable number is for these things. And the profit margin, I went really low on profit margin. Maybe profit margin will be a lot higher than 15%. Maybe it'll be 30%. That's possible.
Zoom's going to struggle in years to come between Microsoft, Teams, all of that. Plus, Apple's going to be putting they're going to have FaceTime. They're going to have FaceTime Zoom, like where you can share your screen and everything. I mean, you have 2 billion devices in people's hands already.
That's the thing.
Google's free.
Mm-hmm.
And you can also, by the way, now, for all you idiots out there who don't have an iPhone, you can have non-iPhone users use FaceTime.
Yep.
That's very important to you.
Oh, absolutely.
You love chastising all your friends with Androids.
Not all my friends. The 2 friends I have that have Androids.
Soon to be not friends.
Yeah, I'm
Rockman and Matt. And Matt's biggest thing is my battery lasts a long time. Congratulations, Matt. You spend 95% of your time at home within 3.7 feet of a charger. Like, really?
Speaking of charging, ChargePoint, ticker symbol CHPT. Mo and I are discussing, oddly enough, on one of the biggest shows out there that hates on Tesla. We both have Teslas, Mo. And
I love mine.
I charged my new Model Y recently in some random parking lot. I didn't have a supercharger, but I did get the dongle out, and Mo, it plugged right in, and I was positively shocked that it all worked and all that. So ChargePoint is providing charging for all.
Did the charge go well?
Yeah, it did.
I was hearing negative things about ChargePoint. Are you?
So I did try. So Seth, I was telling you this yesterday. I tried to use a ChargePoint, and it just wouldn't charge for me, and it was in a Whole Foods parking lot. But I'm sure I was a one-off. They were $50 a share in December of 2020, and here we are at $14.
No way.
Yep.
Come on.
No.
So what follows that? Anybody can do the math? 70%. Thank you.
No, I can't.
70%.
That's what we did.
What's that from? Is that an Office thing?
I don't know.
Wasn't there like one where they follow right back up, like, they just follow like, oh yeah, that's what I was gonna say. Oh, Connor always does that, by the way. All right, so let's go to the 8 pillars. Not enough data, that's right.
Nice.
Let's go to the income statement. Okay, let's go to quarterly income. Let's see some quarterly numbers. All right. So ChargePoint revenue is growing pretty substantially. Do you see this?
Yeah.
This is growing pretty nicely.
Oh. Paul.
Okay. Growing nicely. Let's see how their profits plummeting.
And I actually like to see that this is very slow, consistent growth. It's not just 40 to 160,
Yeah. Oh my God, look at their shares outstanding.
Oh, I'm sure it's crazy.
Oh, it's terrible. Okay. 8 pillars, don't have enough data. Let's go to Stock Analyzer Tool. Okay, the problem we have with Stock Analyzer Tool, guys, should we even do this with Stock Analyzer Tool?
No.
Because we don't have a profit margin. We don't know what their profit margin is or what it will be. They haven't made money. So let's just do something.
What's the revenue growth Paul, what's the revenue growth? Go to the income statement and calculate it over
It's doubled in last year.
So should we do 25, 35, 45? No, 45 is too high.
No, I don't think 45 is too high.
Okay.
Profit margin, let's go 10, 15, 20.
Okay.
Free cash flow, same thing. 14, 16, 18, 14, 16, 18, and 12.5%. So guys, keep in mind, this assumes no losses along the way. It assumes no losses between now and then when they start getting cash flow positive. Sorry, and 10 years from now. So this is in the too hard pile for me.
Yes.
This is immediately in the too hard pile. I don't know their profit margin. I don't know anything about how they're actually going to operate when they are stable, but it's an exciting company. It has a great concept, but they're issuing shares like crazy. It's just a very, very difficult thing to do. Even if this thing was selling for $8, I don't know if I'd buy it.
Yeah. And guys,
I just don't have a clue what's going on with the company.
Yeah, you'll notice the trend is every single time we put something in Stock Analyzer Tool in this video, it's all just pure speculation. We're just guessing what's going to happen. It could be a good guess, could be a bad guess. We have no idea.
Yeah. So my thing is it's too hard pile for me. I just move on from it. But if you think you can do some research and figure out some, revenue growth numbers and some profit margin numbers, by all means, you have to run a discounted cash flow model in Excel though with negative numbers because they're going to lose money for a while. That's an absolute fact. They're not going to all of a sudden go from losing money to making money very quickly.
Right.
I sit here I continue to put myself in the mind of the viewer that there was so much talk of the EVs, all these amazing EV companies that are going to come out and that this was going to be running right alongside them. And this huge fall is just astonishing. You talk about the concept of we don't just buy stocks and they're going to start going up tomorrow. But if you bought ChargePoint at the heights when all the other YouTubers were saying it's wonderful, you were really left holding the bag here, Paul. And you think it needs to fall more.
There. Yeah, every excuse was, Ford's coming out with a car, and this is coming out with a car, and Rivian and ChargePoint's going to be the best thing, and here we are.
Damn. Sorry out there if you did this, and if this speaks to you, join a community. You can have the software. You can use the Stock Analyzer Tool behind Paul. Paul, show them how they can make better decisions moving forward with our software. Go ahead.
So guys, we created the software because our subscribers were sick of waiting for us to make videos, and they wanted to be able to analyze their own stocks on their own. So we created the software. We put it all on your mobile phone. So everything you saw in the video is available on your mobile phone in full. You get 30 years of financial data. You get access to Seth, Mo, and I. You get the full 8-pillar analysis. You get the full Stock Analyzer Tool. And then you also get everything that's coming right here. Everything down here. Exclusive video content only for our subscribers. Everything, the chat community with all of our users. This is all available for only $1 per day. That's it. $1 per day, if you can just increase your gains by 1 or 2% or decreases your losses by 1 or 2% each year, this will lead to hundreds of thousands, if not millions, in your portfolio at some point in the future when you retire. And this is a no-brainer, $1 per day. You're locked in at the price. There are 2 ways to sign up: everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge a sales tax, so you get to save the sales tax for the time being. So again, guys, $1 per day gets you locked in, leads to hundreds of thousands, if not millions. No brainer, sign up.
And remember, that software price goes up every month. So if you lock in today, you will stay at that price moving forward, but it will go up. So get in now, and you can join Mo in the Bid and Ask. He can show you how to trade and take advantage of these ups and downs.
Where it doesn't matter what the fundamentals are doing. That's the best part about Mo's system. It's completely irrelevant. If it's making money, losing money, all they care about is what's the price doing right now relative to charts. Boom. I love it. I'm doing it.
That's our take. Final thumbs up. We'll see you next video. Thanks for watching. Appreciate it.